Welcome to today's presentation, and this is A.K. Astani from Smart VRC. Your audio is in mute mode, and be careful, you are watched by all. So today's topic is sectors to march ahead of stock indices. Which are the sectors? Okay, and more so because of the COVID, at different periods of time, different sectors may move ahead and may even lag behind the stock indices. Yes, we are celebrating our 21st year, Smart VRC. We are into the 21st year. As we all know, business cycle is moves like this, sometimes up, sometimes down. Of course, it is not periodic, it is not purely sine wave, but nevertheless, economies move like this, and stock markets also move like that. Of course, they are leading indicators. They are known to be the barometers of the economy. And since March, stock market is up and economy is following it, once again proving the point. But in this cycle, it is the investor cycle which varies. When the market falls down, when the market crashes, there are a lot of investors who sell and come out of the market. And there are investors who are invested in junk stocks. They also are thrown almost outside the market. So these are the investors who dive. There are investors who are able to survive. They are not that enterprising. They are just invested into the market. They are not very active into the market, like the investors in index funds. Right? They are always invested. Then there are investors, a third category, who are able to thrive. Able to thrive means before the market reaches to the bottom, they change the contents of the portfolio, they change the kind of stocks they are holding, they change the composition, they change the allocation, they change the weightage of the stocks, and these are the investors who are thriving. So I have a poll for you. As an investor, you belong to which category? Whether you belong to the dive, or you belong to the survive or thrive, or none of them. So you must be able to see, to view on your screen. I have given you the options and you have to select only one, and time will be about 30 seconds. I request all of you to participate and let it be an honest opinion, and let us see what are the facts. Okay, 30 seconds are almost over and the results are there for you to see. 58% of the investors have thrived. That is pretty good, and I'm very happy. I'm very happy that those who are holding the same philosophy, same mentality as we at Smart VRC, and 58% of these investors have thrived. 35% have just survived, and 5% have dived. Dived means they have lost the money, considerable money, and there are 2% investors who say that none of the above. None of the above. Maybe they have started investing, or they are yet to start investing. Okay. So thank you very much for your participation. So moving ahead. Okay, there is one more poll. Since 23rd March 2020, this was the day when the Sensex was at the bottom and at about 25,800 points or 25,900 points. Since 23rd March 2020, BSE Sensex has gained 95%. How much your portfolio gained? The first option is less than 50%. Second is 50% to 95%. Third is more than 95%. And the fourth is none of the above. Okay, I'm launching the poll. So you must be able to see this on your screen and you have to hit the options. Since March 23rd March 2020, BSE Sensex gained 95%. How much your portfolio gained? Okay. So 74% of the participants have voted and the results are like this. So 50% of the participants have lagged behind the Sensex. I mean to say they have gained 50% to 95%. And there are 27% more who say that they have gained less than 50% and 7% with none of the above. So there are only 16% participants who have gained more than 95%. Yes, and this ratio is also very high. I must appreciate all of you because beating the Sensex is really very difficult and beating it consistently is much more difficult. Thank you once again for participating in the poll. So what we have done, I have asked you that what was your performance, and here is our performance of Smart Billionaire Picks. Smart Billionaire Picks, what it has done. So this is the peak as you can see onto your screen, and this was the point where the Smart Billionaire Picks value was rupees 42, and today its value is about 92. Not to be very exact, but it is between 92 and 93. And we have gained much more than the BSE Sensex. And to let you know, here is the data in the table. BSE Sensitive Index has gained 95% during this time, and SBP has gained 123%. So our subscribers, our investors have also thrived, and all of them have thrived. This is an exceptionally good performance, and this is not the first time. Every time, whenever the crash happens, post-crash, our portfolio performs much better than the Sensex. Okay, so far so good. Now coming to the sectoral analysis. To start with is COVID-19, and the first, it was the China, which got gripped into this pandemic, and then it was Europe, and subsequently it was followed by USA, and then came the turn of India, my country. Right, and then what happened? First, it was the China, and the quickest one to come out of this deadly, I can say deadly because lots of people have lost their life, and China was able to control this pandemic to a great extent. And then second, among the large economies, among the large populated economies, countries was India. Now, how this will have an impact on the various sectors and how it has already impacted the various sectors is the point of discussion. First is the raw material. Now, this is the raw material. This is about the crude oil. And as you can see, the crude oil, now since we are going to discuss about the future quarters. So what we are looking at, the performance of these raw material prices, the basic raw material prices during the quarter ended December. So we have to look at from September to December quarter. As you can see here, the oil was hovering around $42 per barrel, and today it is 56. So whichever company has a raw material derived from crude oil has enjoyed these gains, and these are visible into the results. But if the crude oil continues at this high level, then maybe probably in the coming quarters that benefit will not be there. So we should be careful. And average crude oil price during the last quarter, from there, today's crude oil price is about 16% up. That is substantial. Coming to the steel prices are up by about 11% compared to the previous quarter's average price. So 11% is also pretty high. Copper is way higher at almost double the rate of steel at 23%. 23% rates are up for copper. So whichever company uses copper as a raw material, it's going to feel the pressure on profit margins. Aluminum is up by 9%. Okay, compared to copper and steel, it is a bit low, but nevertheless, aluminum is also high by 9%. Coal is substantially up 24%. So this shows that the demand for the raw materials like coal, steel, copper, and all this crude oil is going up, and due to the rise in demand, the prices are also up. Now, how the particular sectors will have an impact? That is the moot point of today's presentation. I'm taking a small break, not a break, but would love to inform you about our smart reports, which is not a regular product, but nevertheless is a very important part. And just for 2 minutes, smart reports is not our regular product, and this is for the benefit of all, not only the regular subscribers, but anybody can subscribe. This is a one-time report, and when these reports are published whenever the particular stock story turns attractive, or sector story becomes attractive, or during the crash times. So we are publishing more and more such reports especially during the crash times, because those are the opportunities we should not miss. And it is different from regular products in a sense. This is a one-time report, and we don't review these reports. We do provide the target and stop loss and holding period, and the question arises how to avail. You can subscribe this report, but before that, let me tell you a sample. This is the ITC report, which we launched on 30th of December 2020, and this was free. It was free for all, not only for subscribers, but also for our non-subscribers. So this is the kind of report we publish. This is the page 2. Here you can see the current price, target price, stop loss, perceived risk, holding period, recommended portfolio weightage, even the market capitalization also we provide. And then there is the data about the liquidity, about the book value, about the sector, and all those things. Next is the financial data. And from the financial data, what we can make out, what is the trend for revenue, what is the trend for net profit, what is the trend for net profit margin. So in this case, as you can see, the trend for net profit margin is distinctly up, 17.84 to 30.34. And there is the dividend is also distinctly up. So these are the insights we provide. And then share price, and also about the products of the companies. If there is any special highlight, like the FMCG business of ITC, how it has grown from 2009-10 to 19-20, that was the specialty. And then comes the valuation, how we have arrived at the price. So that is very much important, and great learning also, not only in terms of creating wealth, but also enhancing your knowledge. So currently also we have one report which is live and you can subscribe, and this was launched on 2nd of February 2021, and the name is 3 long-term winners. We have identified 3 stocks. Market cap, all are large cap from different sectors. Target gains 106% average. Okay, some may have more than 100% target, and some stocks might have little bit less than 100% average. This average of 106%. Risk is medium, and holding period average is 34 months. Yes, a little less than 3 years. And then management is of high quality for all the 3 stocks. And report price is 1500 plus GST, that comes to 1770. And as far as how to subscribe, this is the screen on our website. Under Smart Academy, there is a link for Smart Report subscription. So this was all about Smart Report. Coming back to sectors, how this will be impacted. Let's begin. Okay, before that, there is one more poll, and this is going to be very interesting. Which sector can give the best returns in the next 12 months? Options are steel, IT, pharma, and FMCG, right? So the options are available on your screen: steel, IT, pharma, or FMCG. So this is going to be very interesting and very close fight. Yes, I can see fight. Okay. Make it fast. Only 8 seconds left. Still, there are 21 participants to participate. I request all of you to participate. Okay. So these are the results. 31% say IT. So as far as the winning participants are concerned, that goes with the IT. And next is steel, very close fight between steel and FMCG. Okay. And pharma at 16% and hotel at 14%. Sorry, hotel option was not shown on the screen, but it is there in the poll. Okay, let's see. We'll cover one by one for all the sectors, analysis for all the sectors. So the first is bank or NBFC. As you might have observed, a lot of results have already out. Most of the banks have already declared the results, especially the private sector, and results are pretty good, be it Kotak Mahindra Bank or ICICI Bank or HDFC Bank or even Bandhan Bank, right? They have indicated the NPS, and the NPS disclosed by them are bit less than what the market was expecting. And even after removing the impact of Supreme Court's decision regarding the definition of NPA, and that goes very well. And without finance sector, no economy can do well. You all will agree. But at this point, I would suggest you to be very cautious among the public sector banks, because lot many results have already come, and those are not very enthusiastic, and some more are yet to come. Coming to the white goods, not a very good result, but of course, because among the white goods last year during when there was a peak time for air conditioners, we were gripped under the COVID. So these companies, air conditioning companies, were not able to sell to their full potential. And also, but in terms of PLI scheme, wait for some time. Government is likely to come out PLI scheme especially for air conditioners. That can bode well for some of the companies in the white goods segment. Real estate, yes, surprisingly, the real estate has performed exceptionally well. Even the statement given by the Godrej CEO uh, is very enthusiastic, very positive, and in their opinion, this is going to perform well for many years to come. At least at the current juncture, they are able to foresee like that. But be very selective, and there are reasons for that. Even government has increased the uh, uh, duration for tax benefit available for affordable housing, and also the rate of interest are very low, and also some of the properties have been sold at heavy discounts because developers were in need of money. They were finding a cash crunch. And then also in some of the states have reduced the duties, various duties associated with the purchase of real estate. So this is a sector to be watched. Pharma, you all must have observed that pharma sector has a little bit underperformed during last 20-25 days, and there are reasons for that because this is not a luxury item. So with the economy, with the growth in economy, you may not see such a high growth in pharma sector. But to be very specific, as I said, presently China and India are, I can say, out of the pandemic, not out of the pandemic, but out of the very heavy impact of the COVID. And these economies have come to the pre-COVID levels. But the developed economies like Europe and USA, they are still fighting, and they are passing through quite a slowdown. Once they come out of the slowdown, then you will find how USA takes the China plus one policy. So apart from China, I'm very sure many of the companies would like to source their raw material, their medicines from India. And till then, wait patiently, wait for at least 6 months. Don't be in hurry to book profits. And after 6 months, there is a good possibility that long-term pact may be made with some of the large producers of the pharmaceutical from the pharmaceutical sector. And the same holds good for the specialty chemicals. So in pharma and specialty chemicals, if the valuations are a little bit stretched, even then I would suggest to wait. Coming to the FMCG, FMCG is, as usual, a very defensive kind of sector, and nothing exceptionally good can be expected in the foreseeable future. But nevertheless, they will continue to command premium valuations. Infrastructure, as we all know, in the budget, a lot of emphasis has been given to infrastructure sector. And fortunately or unfortunately, not many companies in infrastructure sector are doing well, because since 2008, the companies which were finding it tough to survive have in fact have lost heavily, and still they are under huge debt, and we cannot expect them to come out of debt so easily. So be very careful. And as I can see some of the good companies are, say, Larsen & Toubro, Kalturu Power, but Kalturu Power is in a very specific segment, transmission tower segment. Same is the case with KEC International. So these are just a few. These are just a few companies, and there may be a couple of more, but not many more, not more than 6-7 companies in the infra space, which you can bet upon. Then coming to the aviation and tourism, aviation, I would prefer to stay away, because it is one thing is that it has suffered very heavily, and secondly, there is always a very tough competition in the aviation sector. And airlines business, not only in India but worldwide, there is hardly any consistent value creator in terms of the stock market. Coming to the hotels, yes, this is the sector which will show very good growth, probably from next quarter or next to next quarter onwards. Probably from next to next quarter onwards. So hold the stocks from the hotel industry very patiently, but of course with good quality stocks only. And they can be, I can say, a dark horse. Power as usual, we are power surplus as far as the demand supply situation is concerned, and there is not much scope in power and the associated sectors except for the transmission. Coming to the chemicals, there are again two categories. One is the commodity chemicals, the second is the specialty chemicals. Focus should be on specialty chemicals, and in the specialty chemicals, as we already discussed, wait for at least 6 months. I am very sure at least 4 or 5 companies from India are going to have a good long-term contracts with US companies. Coming to the healthcare, I mean to say the hospital business. Again, there are not many players in the hospital business, and Apollo Hospital is there, but it is highly, I think it is highly overpriced, very high valued. I'm not saying in terms of the absolute share price, but in terms of the valuation, in terms of the P to growth rate, is very high. Coming to the stimulus and valuations, yes, a lot of stimulus has been given by the developed countries, especially, and stimulus has been provided in India also, but it has been very limited stimulus. Stimulus has been given only to the needy and low income group in our country. While especially in case of USA, a lot of money has been thrown, a lot of money has been given to the, even especially to MSME sector, and that is going to create inflation. But in our country, nothing like that has happened, and we have given a stimulus based on performance also. Like in PLI scheme, you cannot get a subsidy unless you produce. So you produce more and take the subsidy like that. So that is good for us. And valuations, let me go back to before 2008 crisis. Before 2008 crisis, you can easily find the stocks with a P ratio of 20, 30, or even 40, not more than 40. But now if you see, there are a lot many stocks which are commanding 70 to 80 P ratio, and their growth rates are hardly 15%, not even 15%, and stocks are commanding a P ratio of 80. So this P ratio may still go high because another stimulus has come. The first one was yet to be absorbed, and the second stimulus has come. So increase your, if you are using P to growth ratio as I use, so if you are using P to growth ratio, increase your base limits. So what should be the strategy? So this, the blue line, as you can see, this was the normal line, and we were growing at the rate of about 6 to 7% every year. And now the COVID has stuck during last year, and post-COVID, there is going to be a decline. Already first quarter, we have our GDP has declined by 24%, and for the whole year, our GDP may decline by about 8%. So there is a decline. As you can see, the red line has come down, and from here on, we are going to rise. If it has been a 6%, then this red line would have been parallel to this blue line. But this is not the case. Actually, our economy is expected to rise at a much higher rate. So what would happen? So actually the new normal would be like this red line. As you can see, it will fast catch up the blue line, but it will take a lot many years. Maybe by 25, 26, we may be able to catch our normal growth rate. So does it mean that the stock market will also follow like this? No. There are reasons to believe so, because our growth rate will be very high, agreed, but our GDP has come down. So that lost value, definitely it will take a long time to recover to that level. But as you might have seen in case of GST, It has jumped to about 1.19 lakh crores for the month of January. Okay, how? This because of the formalization of the economy. A lot of major reforms have been taken during the last 5-6 years, and all those were targeted on the formalization of the economy. And this during this pandemic time, during this COVID time also, this has happened. Not many small and medium and micro enterprises have closed their shops, and all their business is going towards the large companies, and those large companies are listed, and those are forming the index. So index may not go back by about 4-5 years, but yes, in terms of GDP, it will take a long time. So that is how you have to appreciate. You have to see it from a broad angle, see it from the top, what is happening. Okay. So the strategy should be presently what you need to do in your portfolio. You have to review each and every stock in your portfolio, whether it is still worth to be invested at current price. If your honest answer is no, then it is time to move on, make an exit from the stock. Stay fully invested. I always keep saying stay fully invested, and not only during the boom times, but also during the doom times, because you simply cannot predict the market. No one can predict the market, so better it is to stay fully invested. To give you an example, if somebody has sold his holding in the month of March or April in anticipation of further decline in the stock market, you can very well appreciate how much he lost. Suppose on 23rd March, somebody sold full holding, okay, anticipating that market will go down further, but it didn't went down. Today, market is up by 95%. How much time he will require to gain this 95% returns? If you put it in bank, believe me, in your lifetime, you will not be able to get 95% returns. Real returns. Real means post-inflation. So don't try to predict the market. Stay fully invested in all your good stories. That is the success mantra of winning in stock market. Don't look back, look ahead. Yes, there are many companies. I will give you an example of, say, Tata Elxsi. If I am not wrong, then on 23rd March, Tata Elxsi was somewhere about 600 rupees, and today it is 2800 rupees. So if you look back, yes, it has already grown by 4 times, more than 4 times. But then what you have to look is the future prospects. If you go by the last couple of quarters management's comments on the business, then you will find why it has increased by 5 times. I am not recommending, I'm not giving you any advice to buy or sell or hold for Tata Elxsi. I am just giving you an example to understand that you need not have to look back, you have to look ahead. Okay. Keep improving the quality of stocks. Yes, I am very sure we all have a couple of stocks whose quality is not that good, and this rally has given us an opportunity to make an exit from such stocks. And you should be always invested in stocks where you have the conviction, where you have the strong conviction. So keep improving the share of full conviction stocks in your portfolio. Yes, markets will rise and market will fall. There will be a lot of volatility, as you can see in the past so many years. It has happened during last 30-31 years. You can see how much volatility is there, but it is the stocks which will speak. It is the stocks financial results which will give you the returns, and this volatility is your friend. Yes, I am very happy when the market falls by 4,000 points, 5,000 points, or even 10,000 points. I am the happiest person. Why? Because I am getting an opportunity to buy my favorite stock at low price. And similarly, when the market goes high much above the real worth of the stock, you get an opportunity to make an exit, at least part exit. So volatility is your friend. Market is your friend. It will keep giving you an opportunity to buy low and sell high based on that decision you have to take on the intrinsic worth of the stock, the real worth of the stock. If you don't know the real worth of the stock, then you are playing in dark. Whatever profits you have made is by chance. You will not be able to survive for long in this market. The crux is you must know the worth of the stock. So coming to the end, smart word, strong conviction helps overcome fear. Yes, if you have a strong conviction, then you cannot have fear. Emotions play a very crucial role. It is a game of science and art. When I say art, then it is the art of controlling your emotions. You have to control your fear and greed that comes from conviction. You must have a very strong conviction, whatever you buy or sell. So after this presentation, we'll have a question and answer session, and you can raise your hand in the chat box, and I will ask you to unmute yourself. Thank you very much for sparing your valuable time, and I hope you enjoyed this session. Your feedback will be highly appreciated. We keep on working on how to improve these webinars, how to deliver you the knowledge and wisdom we have gained over the years, and your feedback and your suggestions are always welcome. Thank you. Okay, coming to the question answers, as I can see in the chat box, the prices are high due to logistic issues, or they are high mainly due to demand. Both are there. Prices in general are not high. I would not say high. Prices of the final products are not high, because if you go by the inflation is not that high. And okay, any other? No chat box. Okay. No. Mr. Arun Saluja, kindly unmute yourself.
Hello.
Yeah, yes, sir.
Good morning, sir.
Good morning.
So, in one of your webinar when I was attending, you said that I used to change my portfolio according to the situation. Like right now, I am investing heavily in long term, but maybe when the time come, I'll shift my portfolio from long term to short term. So, do you think this is the time that we'll move our shares from long term to medium or small term? Small cap, large cap to medium and small cap. And second question is your view on auto industry.
Sorry, please repeat it.
So the first question is that
last one.
Last question is related to the auto sector, sir. Your view on auto sector?
Okay. Thanks for your queries. As far as the short term or long term or medium term is concerned, we are always invested for long term, and assuming that we need not have to sell the stocks for next 3-4 years minimum. Because if you are trying to invest for short term, that means you're trying to predict the market, and we don't believe in predicting the market. Yes, markets have gone up by around 100% from 23rd March 2020 during last 1 year, but markets have gone much more higher than this during 2009 recovery. And I still remember in 11 months, our portfolio multiplied 4 times in 11 months. So I never try to predict the market for the short term. I always look for long term. And regarding the this market cap, what we should bother is about the worth of the stock. Market cap does not play any role in deciding the worth of the stock. And it is true that all, I should not say all, but majority of the large caps are already truly priced or highly priced. So most of the opportunities you will get is in mid cap and small caps, but that should not be the criteria. We should always think in terms of the valuation. What I mean to say is Maruti Suzuki at rupees 7,000 should not be seen in terms of the 7,000. That is the share price at that point. If it is split into 1:10, then 7,000 will become 700. Then it will become little bit small priced, but market cap will remain same. So we should always go for the real worth of the stock. Whether at 7,000 rupees, what should be the worth of the Maruti Suzuki stock? And regarding the auto and auto ancillary, most of their raw materials have gone up, and even the companies have acknowledged this fact. And that was the reason why a couple of companies, rather all of the companies, have increased their product prices from January. But still, that will offset only partly. So going ahead, that pinch will be felt, and the further growth will depend on, further increase in profits will depend on how much more vehicles they can sell, because that advantage of low raw material prices have almost vanished. I hope I answered all your queries. Mr. Neeraj?
Sir, how to calculate the Incentric value or the real value of the stock? Is there any formula of yours?
Yeah, there is no straightforward formula, and there is the real point, there is the crux. And I am very sure even not half the percentage of the investors, half means 0.5 of the total investors, they do not know how to calculate. It is, in short, there is no clear formula. There are certain calculations with which you have to add the qualitative factors of the management, and then you have to arrive, and that requires a lot of experience, a lot of wisdom. For example, when you are driving a car, if I ask you how you decide to change the gear of the car from second to third, I am very sure no one will be able to explain, because it is not pure science. You cannot say that when the RPM goes to 2000 RPM, then I change the gear from second to third. No, it is not like that. There are a lot many other factors, like what is the slope of the road ahead? What is the response of your car? What is the kind of traffic ahead of you? What is the kind of road ahead of you? So there are a lot many factors. We cannot define how you change the gear of the car. So same is the case with the valuation. It is not so easy, and it keeps on changing depending on the story of the stock. Story means the management, the future prospects, the company products, and all those things.
And sir,
Yes, sir. You are telling something. Yeah, Mr. Neeraj.
sir, and what are the parameters except the PEG and P by book value of the stock are you following for the calculating the Incentric value and the story?
Story is, as I said, it cannot be defined, and story cannot be. I cannot tell you how to find the story. I can tell you how to find the story, but I cannot tell you if there is any formula. Because you, as I said, in case of Tata Elxsi, if you go back and look for the last 4 quarters management's comments, then you will find that how the story has changed during last 4 quarters. It is going to be very interesting, believe me. Just you have to spare hardly 15 minutes, and then you will find how the story changes. That is the thing. And regarding how to calculate the intrinsic worth, we have taken a lot of webinars last year in May, June, and we have prepared in a very logical form, and we have prepared the videos, small videos, and those are available on our website. It is among under the category Smart Insights Pro. These are very short videos of 20 minutes each, and you will really love it. Means you'd like to hear it again and again. We have covered multiple ways to find the worth of the stock.
Okay, thank you, sir.
Thanks. Mr. Ranjan, Mr. Ranjan Sahi. Kindly unmute yourself.
Hello, can you hear me?
Yeah, I am able to hear you, sir.
Yeah, I just want to ask you about the Asian Paints. It has corrected about 10% from the early January. And the second share, specifically, I want to ask you about Nestle, which has corrected about 8% from the end of December. So what do you think about the future? Is it the right time to buy these shares?
Okay. Thanks for your query. It is not the correction which decides whether we should buy or not. It is the real worth of the stock. With respect to that, how much is the current price, that decides. If after the correction, current price goes below the worth of the stock, then it is time to buy. Coming to the Asian Paints, its share price has grown at a compound return of about 21-22% during last 10 years, while its profits have grown at the rate of about 15 to 16% only. So clearly, stock valuations are going up and up and up, but the profits are not growing at the same rate. So if it continues for a long time, then we say as a bubble has formed. I am not saying that Asian Paints is under bubble, but definitely its valuations are way too high. And that is the reason why that Indigo Paints had a comparatively very low PE to growth ratio when you compare to Asian Paints. Just look back for last 10 years and compare Indigo Paints with Asian Paints, and you will find that Indigo Paints is doing much better. So
okay.
Yeah.
And what about Nestle?
So Nestle is, budget has, a lot of reforms have been disclosed in the budget, has been announced in the budget, and those are not going to have a direct impact on FMCG companies. That will have an indirect impact. But because first the infrastructure sector infrastructure and the other sectors will improve, and then because of the increasing level of the income, increasing level of employment, the FMCG sectors will have an impact. And that is why the FMCG stocks and the pharma stocks have taken a small beating.
Okay.
Yeah.
Right. Thank you.
Thank you.
Thank you so much.
Thanks. Yes, Mr. Jeet.
Yes, sir. You shared the slide of strategy. Can you reshare it again? Strategy slide in your presentation. I would request you to share it again, sir, if possible.
Okay. Yeah, here it is.
Yeah. Okay, sir. Thank you, sir.
Okay.
Thank you.
Mr. Nihar Sharma.
Yeah, good morning, sir.
Good morning.
The question is related to Granules India. I would just like to know, like the company is growing at a very faster rate, but still the PE of the stock is very low and stock is not rising. So what's your opinion on that?
So there is a good opportunity to buy if you think so that the intrinsic worth is way higher.
Okay.
Yeah. And secondly, as I said, you should wait for at least 6 months. Let's the developed countries also come out of this COVID impact and then decide yourself. As long as the company is regularly delivering good performance, if it is regularly delivering, announcing good dividends, you need not have to worry, and you have to have only the patience. Maybe the stock has already run up by great extent during last 1.5 years. That can be the reason. And at this point of time, I would not suggest to sell the pharma stocks and just have patience and wait.
Right, sir. Thank you, sir.
Thanks. Yes, Mr. Prashant.
Okay. Yeah. I can hear you. Thank you very much. I have a question actually. So ITC is currently under 52 weeks high. The current market price is approximately about 230, and PE ratio is 20. So just want to know, considering the current market price of ITC, considering 52 weeks high and PE ratio of 20, suppose I would like to buy. What is your thought process on that? Or what do you suggest or recommend?
So everything you have already said, not much left for me. Already the P ratio is way lower than the other competing FMCG stocks. They are way lower. P ratio of Hindustan Unilever is something about 70 plus, and this company, as you said, it is about 20 plus. And also the dividend yield is pretty good. Dividend yield itself is about 3%. And the only issue is the cigarette business, which is not liked by many investors. And maybe in times to come, if the company decides to separate its various divisions like paper or hotel or FMCG or cigarette, then value unlocking may happen, but that can take a long time. So I would not suggest to go for a very big weightage, but maybe about 3 to 4% weightage. Yes, you can go with that with this company. And you will appreciate that this company scores very high on ESG. It is above Hindustan Unilever. It has lots of green buildings, green hotels in its portfolio, and we all know that it is almost number one in stationery. Ashirwad Atta is from this company only. So a lot of products are under the top condition or the second one. So nothing to be worried. It is only a matter of time, but that time can be very long. Maybe it can be in months or it can be in years also.
So can a new person who has not bought ITC, can he buy at the current levels?
Yes, he can buy.
Okay, thank you. I think it answers my question. Thank you.
Thank you. Yes, Mr. Nilesh Pujara.
Hello, sir.
Yes, sir.
Just wanted to know your valuable inputs for Bharat Forge. Looking at the this thing, auto and the defense sector, this thing. Just wanted to get your inputs on Bharat Forge, sir.
Okay. Bharat Forge is basically into a fabrication and machining, and it has very good export market, but all those goes to the automobiles, means mainly to the automobiles. I think about 60% output goes to the auto and related sectors, and it is diversifying into the non-auto sector like aerospace and oil, but it will take a bit long time to get a sizable proportion in its total turnover. In automobile, as we all know, the world is trying to shift to the EVs, and the company is well aware. Company is also making efforts to have its presence in the EV segment. And at current price, it is a bit highly priced. I think P ratio is very high, and there is a class 8 trucks manufactured in USA. So if you want to track Bharat Forge, then you have to track class 8 trucks manufactured in USA. What is the order book? That is the right strategy. And overall, at this price, I would wait.
Okay, sir.
Yeah.
Thank you so much, sir.
Thanks. Welcome. Okay. There is a query in the chat box. I can see is what is your view on the glass industry? Stocks like GMM, Fowler, HLE, Glasscoat, and Asahi. GMM, Fowler, and HLE Glasscoat are from the same sector. They are supplying glass-lined equipment to the pharma and chemical sector. But Asahi is different. It is manufacturing mirrors for the automobiles. So Asahi is different from this. And prospects for all these three stocks are reasonably good. Probably GMM, Fowler, and HLE Glasscoat are commanding a bit higher valuations. Nevertheless, post-pandemic means post this about 3 months or 6 months from now, you will come to know, especially for the GM Fowler and HLE Glasscoat, what are their future prospects. Okay, interesting. Hotel sector stocks already doubled ahead of fundamentals without any earnings. Yeah, because investors are looking ahead. As I said, don't try to look back and see. It is not that the hotel industry will never revive. Hotel industry will revive, and as I said, even the very small hotels or the mid-sized hotels, many of the groups have suffered very severely, and that advantage will be derived by the bigger hotels, the listed hotels. How about home finance companies? Home finance companies in general will do well because the real estate is doing well. Okay, views on Yes Bank. We don't include any stocks which does not have a positive story. So I would prefer to wait for the company, for the bank to declare good results consistently for at least 3-4 quarters. Then only I can think of valuing the stock. Okay, with this, we have come to the end of today's presentation. And thank you very much for being with us and also participating in the polls and your questions in the chat box and your audio. Thanks for being so much interactive. See you next time. Thank you.